Mona, is it possible that, in fact, the data we're looking at might not be the same data that at least Chairman Powell's looking at? Because he's now saying when you see a crisis, it usually comes because of excesses in the financial markets, not because of inflation directly. And so to some extent, is he really saying, and maybe the Fed is indicating, you know what, we got to worry about that, excesses over there, not so much CPI?
Yeah, I think he comes from a background, he was in private equity. He knows the markets well. He understands where the cautions and concerns are. So I do think he's probably more than even Chair Yellen was watching the financial markets. And what he saw over the past week may have actually given him a little bit of pause. Clearly, we're seeing what's happening internationally. And I know we'll discuss China and EM in some time as well. But I think he's looking at that, seeing could that impact our markets as well. So he will be focused on the economic data, but I think he'll be a little bit more balanced looking at financial markets as well.
Well, let's take a look. Sorry, go ahead, Carl.
I would just say he better not be ignoring the economic data, because we've seen a string of soft inflation prints about the last 7 or 8 inflation indicators, whether it's CPI, import prices, PPI, inflation expectations in the University of Michigan survey. All of these have come in cool. And so if you continue to tighten as the vector on inflation is starting to drift lower, it's not going to be just President Trump that's saying this is inappropriate to further tighten policy.
Well, President Trump has a point, is what you just said.
There's some point to it, absolutely.